Hello traders, welcome to the video. In this video I want to be showing you a very accurate and simple strategy that you can use to scalp the volatility index market. So you can look carefully on my chart. This is 1 hour time frame and this is volatility 75. You can use this strategy on any volatility index. You can also try it in the forex market. So first, let's set up our chart. Click on this indicator icon over here. As you can see, I have just two moving averages over here. To select the first moving average, click on the F icon on the main chart and search for moving average. Make the period to be 20, shift to be 0, method to be exponential, apply to low. For the styles, make it color of your choice, PZ of your choice. After that, click on save. While the second moving average, click on the F icon on the main chart again and search for moving average. Make the period to be 20, shift to be 0, method to be exponential, apply to high. The first one is low, while this one is high. Select style of your choice, PZ of your choice. After that, click on save. So if you follow my settings correctly, your chart will look exactly as what you see over here. So first thing you want to pay attention to is your 1 hour time frame. Then you will go to your 5 minutes time frame to look for your entries. So this strategy is not a 100% strategy, but I will guarantee you that if you pay attention and you follow the rules that I'll be giving in this video, you will get higher win rate. And if you have higher win rate with good risk management, you can make more out of the market. So first thing you want to pay attention to in the 1 hour time frame is the market going on a downtrend or it is going in an uptrend. So to determine that, you want to see candle closing below this two moving average. If you can see over here, you can see that this closes below the two moving averages. So when you have this close, this is telling you the market is likely to continue in a downtrend. And for the uptrend, once you have this close like this is telling you the market is likely to continue in an uptrend. And as you can see, we have a rally up for some short period of time, and over here we have a rally down for a short period of time. So I'll be using the two for my examples. So first thing you want to do is you want to first avoid situations like this where the market does not have a specific direction. So you need market to be in a downtrend or in an uptrend. So this is a trend following strategy. So if you look over here, let me mark out this level. This is where you see the market closes below that moving average. Then you go to your 5 minutes time frame and look for your entries. So this is the area I marked. Half market come, reject this green line. You can enter your sell, or you see the market is already trading below the moving average. You can have your entry here. Your stop loss will be above this yellow moving average. So you can see you want to hold your trade until when you see market closes above the yellow moving average. So this yellow moving average is for your exit, and this green moving average is for your entry in this 5 minutes time frame. So you can see over here we have rejection. Rejection did not close above. We continue to hold our trade to the downside. So entry here, stop loss above here, and you hold your trade until here when you see the market closes above the moving average. So when this candle closes, you will close your trade. So you can see it here. If you have your entry almost at this point, and you hold your trade until when it closes at this point, you see how many profits you'll be able to cash. And over here, so this is why I say you are likely to take some couple losses. So once you see market goes below this green moving average, you can have your entry, and when it closes above, you close your trade. So over here you take a loss, and let's say you enter here, you can take another loss. So here, once you see this drop again, you enter your sell and you hold your trade until when you have a close. So you can see that here to here, here to here, you've already taken out all the two losses you take from this point with this trade alone, and you even make profit out of it. Because if you enter here, your closing will be at this point when you see market closes above this yellow moving average. Hope you understand what I'm saying. So how do you know when not to go for a sell? You go to your 1 hour time frame. So once you see candle closes above this moving average, this yellow moving average, you close your trade on the 1 hour time frame. So you don't look for trades anymore. So you wait for when it goes below like this point again to cash trade to the downside. So let me quickly explain how this uptrend works. So over here, once you see candle closes above this yellow line, what you want to look for next is your uptrend. So let's go to the 5 minutes time frame and go to that position. So over here, so immediately you see this, you can enter your buy. Your stop loss will be below this green moving average. So the reverse will be for the buy condition. The first one I showed you is the sell condition. So you can also wait for the rejection. You see this rejection, you can enter your buy, stop loss below here again. It all depends on you. So you hold your trade until when you see this close, then you can have another entry here and hold your trade until when you see this close, then another entry here, then you hold your trade until when you see this close. So most times market will not give you this strong nice move to the downside, but many times when you are in the right side of the market in the 1 hour time frame, it will give you something like this. So let me show you one last example over here. So you pay attention to this level. This is where we have the close of the candle below these two moving averages. You go to the 5 minutes time frame and look for entries. You can have your sell. You can see that markets behave choppy here. You have another sell here. Then you hold your trade until you can see that market keeps rejecting this yellow moving average. It is telling you that there is more sellers in the market until this point. So entry here, and your stop loss will be below here. So one thing you can also do to increase your win rate is this one. Let's say you have market closes below the higher time frame, the 1 hour time frame over here. So you can wait for it to create a swing low like this. Then you can take your rectangle to mark this swing low out. So once you see market breaks below that swing low, you will wait for the retest of the moving average. So these are the ways you can avoid taking losses around this point. So once you have this retest, you can enter your sell. Your stop loss will be above here. Then you will hold your trade. You see rejections, and then you will hold it to the downside. So from the first example I gave, let's say this is where you have the close. You can mark this out to be the last swing low. So we have rejection over here, enter your sell, stop loss above here, then you hold your trade up to this point. Hope you understand what I'm saying. So basically that is what I want to show you in this video. After this, I want you to go back on your chart, backtest this strategy and see for yourself, and make sure that you apply proper risk management when trading, because you can have a very good setup, good strategy, but if you don't know how to manage your money and remain disciplined, you will definitely blow the account. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.